Welcome to the Comstock channel. Today I'm honored to have Jim Wiesemeyer, Washington policy analyst. I would call him Washington policy expert with me. And we want to talk about farmer aid because that is a huge deal. We continue to see low commodity prices and high input costs. And as a result, 2026, as we move forward, looks like it'll be another rough year for crop farmers in particular. And that's despite the Farmer Bridge Assistance Aid, FBA, as we'll call it today, that is coming. So, Jim, welcome, and thanks you for joining me today. Hopefully you have great insight for all the listeners. Let's start off with what we know. The FBA, the Farmer Bridge Assistance Program. What do we know on that front? Give us some details there, and then we'll talk a little bit more as we move forward in our conversation about what's ahead.
Sure. And you've got the charts ready to go on that one? Farmer Bridge Assistance Program. That's the one that's been already announced, the $11 billion now, $1 billion for specialty crops. That includes, sugar, by the way. The source of the funding came from the Commodity Credit Corporation. President keeps on saying it's coming from the tariff funds, but that's incorrect. The payment timing, no later than February the 28th. I think you'll see an announcement from USDA on February the 3rd. Now, when we go through the per acre payments, that chart shows how they're calculated, and the most chatter about this is how low soybeans is just under $31. Corn is $44.36 an acre. Now, these are already factored, so it's not 85% of this amount per the acre. That is the amount. And
that's a change from what we've seen in the past, right? We've always
Absolutely.
had a factor involved before. This is 100%. So the corn will be paid 100% of that, soybeans, so on and so forth.
Yeah, they actually built a factor in. They didn't really say that when they announced it, but this is more than an assured program because they have the acres and they have the money, $11 billion for row crops, $1 billion for specialty crops. So they could be pretty specific without having a factor later on. Another breakdown on the Farmer Bridge Assistance Programs by crop, you can see rice is way up there, cotton and oats, and then peanuts. And there's different payment cap, and some farmers don't like this. I think USDA went conservative on the payment limits, and they even have an AGI test that if you have 900,000 or above, you don't qualify for this program, and you're not going to see that in a likely congressional farmer aid program later this year. We'll talk about that shortly. The next one shows why rice, cotton, and other crops are higher than corn, wheat, and soybeans, because you can see the multi-year negative margins are more severe for cotton, rice, and peanuts. That's one of the reasons why they had a higher payment rate, also based on their crop cost of production. And then the next slide, you can see crop payouts. It's obvious with corn, with the acres, we'll get the majority of these payments, $4.3 billion. Soybeans, almost $2.5 billion. And wheat, comes in at almost $2 billion, $1.9 billion. And by state, of course, Texas is the biggest state to get these Farmer Bridge payments, Illinois and Iowa. So again, that should not be shocking there. Now, when you go through what we call the OB3, the One Big Beautiful Bill, Title I provisions, there is a lot of farmer aid or assistance, a better Title I program for farmers. Higher reference prices that really don't kick in until October with these improved ARC PLC payment rates. And then you have the increased loan rates. Base acre increases start in 2026. They're going to have up to 30 million more base acres qualify for farm program payments. Again, that's 2026 forward. Bottom line, almost $50 billion was invested in the Title I program via the legislation, OB3. That's the largest infusion since the 2002 Farm Bill. Now, when we keep talking about the October payments, you can see where it's estimated by University of Illinois, corn could get a little over $6 billion, wheat almost $3 billion, and soybeans I'd say $1.2 billion. But this is why we need a bridge assistance payment program between now and then. Of course, farmers want to get the price from the marketplace. So if that happens, then these payment estimates will go down. But I think farmers would be happy if they're actually lower. That means you have higher cash prices.
Yeah, so we have the FBA payments coming by the end of February. And
Yes.
then we have all the way till next fall. We need to bridge that gap, and in all likelihood, that'll be via something that Congress does, correct? And talk us through that and what some of the hurdles are there in terms of getting some additional congressional aid intact for the 26 year.
Sure. The additional payments that there were some people, including Farm Bureau, who thought we could have this as an add-on to a fiscal year 26 appropriation bills. They have a minibus going through that'll be voted on, but it wasn't included. Neither the farmer aid package, they're talking, Brian, over $15 billion, over $15 billion, with $5 billion coming for specialty crops. That shows you how USDA's $1 billion for specialty crops was very anemic. But I didn't think that was going to be part of this week's bill, because that's a regular spending bill. And congressional leaders like to keep that relatively clean. They have a total level that they've agreed to between the two political parties, and it's very hard to get that overall funding agreement. So when will we might get it, and how? A supplemental spending bill. When I called around to Capitol Hill this morning, that could come anywhere between February and April this year, but still in time before that, well before that October, payout. And it's probably going to include year-round E15 for corn. So again, we're talking February, March, or April for a supplemental spending bill that could also include year-round E15. Now, what could be part of that process? The Senate Republicans have already said they want an expanded FBA coverage, a larger share of the producer losses, and that means at least probably 10 to 12 billion additional dollars, I would say. Higher payment limits. They want to align the payment limit improvements in the One Big Beautiful Bill to better match real world losses. In other words, a higher payment limit than USDA has under their FBA. Then they have an interesting phrase in the Senate Republican farmer relief package that's going to be coming up. They say they want targeted relief above national averages. And they say special aid for producers forced to sell at depressed prices or facing elevated production costs, allowing base FBA payments to flow immediately. Now, that to me is a signal for soybeans, because the Soybean Association was not so happy with the payment rate, as I said before, that they're having under USDA's FBA calculations. And they say that a number of soybean producers were forced to sell before we saw, remember, that $1.50 or so run up in the price late last year. And they're going to get some of that back basis, I think, the Senate Farmer Aid package. And specialty crop supports new funding and flexibility because USDA's $1 billion woefully short, especially since that included sugar. In the Senate Republican bill, they specifically mentioned sugar beet and cane assistance because they've had record losses in an oversupplied market. I've been to Fargo a couple of times already this year, and you're talking $300 or more an acre losses, Brian. So they're heaving. Now, they've had some good years before, but they've had probably 2 years straight of losses, so it's starting to hit the core. There'll be higher loan limits for farm ownership and operating loan limits. So that's what's really in the coming Senate package, and that's a big cash infusion that's going to be coming. Now, there's another payment coming sometime this summer, and that's a top-up payment for stage 1 of the Special Disaster Relief Program, SDRP, stage 1. Probably for stage 2, but the big one for farmers is the first stage, and that could be a hefty payment as well. So what I just said, we're going to get some cash infusion, assuming the Congress gets their over $15 billion additional farmer aid approved. Now, all this, the sooner it comes, could get into the planting acreage consideration on a farmer, but I'll leave that up to you. And that's the element of timing, too, when farmers get those payments. Now, if you could go to the Farm Bureau charts that I presented, beginning with input cost rise for the third year. These are, well, we're going to step through those, and this is fresh. This was just put out this morning. And I think Farm Bureau has done a very good job. This is why input costs are rising for the third consecutive year. And see, this is why crop insurance doesn't help you when you have multiple years of low to very low prices. And that's why you need either Title I payments, that again, we've said won't come until October, or economic assistance, which both the administration and Congress is going to do. Now, the next one shows row crop farmers continue to lose money. It's really an update of the chart I previously had. But look at cotton, woefully cotton and rice. But cotton, they really need about 85 cents or so to really make a profit. And we're into what, low 60s, low 60 cents. And you can see rice is coming up, but still woefully short. And you can see wheat, corn, soybeans, and barley, 3 consecutive years. And then the next one shows cost of production for major row crops. And this is another reason why rice and peanuts got a higher per acre payment, because their cost of production is so high. But you can see corn there is right up there on the cost side. That's primarily as a result of fertilizer. And we have the breakouts of the cost. And again, this is a Farm Bureau chart. And I think they've done a pretty good job of showing why agriculture is in this cost spiral here, because these costs are not going down very much at all. Farmer losses remain after federal bridge assistance, and this is another revealing one. There's a lot of, even some farm publications say this has been, the FBA was a bailout. It's an insult. No way does this make a farmer whole, because the Farm Bureau charts show the remaining loss after the FBA payment and the ECAP payment. That was last December's payment, the $10 billion payments. And you can see rice still has remaining loss of $210, cotton $202. You can see corn and soybeans, corn at $87 and soybeans at $61. Now, another way to look at this is the next chart. These are the break-even prices. They continue to rise across major crops. Now, this is marketing year average prices versus break-even levels, national average. And these really vary by state, because a North Dakota corn farmer is going to tell you, hey, Illinois, hey, Iowa, we have a far wider basis than you all, but that's the way it is. But you can see soybeans have a break-even price of $12.42, and their marketing year price, I guess USDA, is $10.20. So there's that gap there. And you can see wheat, look at the gap there for wheat, corn, etc. But look at rice on the far right. They're narrowing the gap. So this is what I'm starting to hear from other analysts, that these assistance payments for rice is getting rice closer to the break-even cost, and peanuts as well. But you can see the big gap with cotton as well. I think this is an interesting chart to show the pain that's out there. So that's where we're at, Brian. We're at a cash infusion initially from the Trump administration of $12 billion, $11 billion to row crops. We've got the SDRP, the Special Disaster Relief Funds, coming out there with the top-up payment coming more likely around June, and that'll be a chunk of money. Then we have the eventual Senate and House Farmer Aid additional package of over $15 billion, with around $5 billion of that coming for specialty crops, and maybe a separate payment for sugar beets and sugar cane. And then in October, we have we have ARC and PLC payments kicking in if the market price doesn't increase from current projection levels. So we have a lot of cash infusion coming out. The timing of it, I think, will depend on how farmers view acreage mixes, especially between corn and soybeans.
Yeah, so bottom line there is that aid is on the way, additional to the FBA payments that you'll receive by the end of February. It's just a matter of timing and how much that eventual aid is and all the other things. Now, so we're still swimming upstream from a crop production side of things in 2026. Costs are exceeding levels of production and revenues there. And so we're underwater, but help is on the way. It's just a matter of when it comes and how much it ends up being. And so I think that's the bottom line here, as I hear it. Anything that I missed there, Jim, that you want to add to that?
The only thing I would add is the crop insurance program also had a cash infusion of higher subsidies for ECO and SCO and things like that. And that just gives more farmer backup support and more revenue assistance. Even shallow losses are covered. I've been to more than a few crop insurance meetings, and farmers are really taking a shining with the dramatically increased subsidies to buy up crop insurance, especially in ECL programs. So take a look at that. And then after this year's crop, those higher reference prices are already there. So that'll, I think, serve as a far better foundation for Title I payments. So maybe we can come out of this 3-year downturn. When you look at history, Brian, usually you don't last much longer than 3 years recently in a downturn. And I hope that's correct as well. And then you couple that with domestic utilization, hopefully will kick in for corn and soybeans once we get the details of the Renewable Fuel Standard program, probably in February. And then when we ever get the Treasury Department to release tax incentive details for the sustainable aviation fuel. So that's going to be a domestic pickup in the fifth gear, I think, especially for the soybeans, because we'll use value-added crops there, not just the soybean, but soybean oil relative to sustainable aviation fuel. So that paints a pretty good picture of support. That doesn't equate to a bull market, but it means that we're going to stop the heaving down on the drain of equity.
Well, and you said it early on, every farmer out there, they want demand and market-driven prices more than they want aid, but the aid is there to help them get to those higher price levels and periods of higher price levels. And so I think that is the key. Like you mentioned, there's not only all the farmer aid stuff that will be in the year ahead, but we have a lot of policy decisions, especially on the renewable fuel side, the biofuel side of things, that could have an influence in a positive way.
Absolutely. Absolutely. So it looks like both domestic utilization will kick in by summer probably. And as these payments come through, I know a lot of the payments will pay down debt, but that'll make it more, not easy, but easier to get planning funding for the 2027 crop. So at least we're putting the tools together for a far better safety net. So farmers, so some of these trade agreements, if they do ever kick in, will show true additionality. But that's a whole nother subject because of volatility of President Trump, the Supreme Court ruling on the tariff funds, etc. That's a subject for another podcast, Brian.
Yeah, absolutely. I'm not sure that the trade uncertainty is ever going to go away under President Trump's presidency, and probably whoever follows for that matter. That may be a longer term issue. What we want to get in is more stability and that type of stuff.
Which is why you have to have the domestic use kick in, because that you can count on once we know the rules and regulations.
Absolutely. Excellent. Thank you, Jim,
for
joining me today. Excellent commentary that farmers need to know. Like I said at the beginning, You're a Washington policy expert, and so that's why I turned to you for this subject. For the Comstock channel and Jim Wiesemeyer, I'm Brian Grete.
Futures trading involves risk. The risk of loss in trading futures and/or options is substantial, and each investor and/or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.